Good afternoon, everyone. Adam, you did all my hard work. We know now where to put the money. But one question you didn't answer, what you will do if you have, say, $1 million in your bank account? Wait and watch, right? Thank you, thank you. Good afternoon, everyone. As you know, the topic, very interesting topic now, best investment in shipping. Before I get into myself, Amit Kumar Sureka, CFO from Emarat Maritime, Dubai. And I would like to introduce our great panelists today. John Su, Group Chairman and CEO, Erasmus Shipinvest. Wei Hong Lin, Senior General Manager, Commercial Development, PCL. Faidon, Head of S&P, Lila Global. George, Managing Partner, Alantra. And Konstantinos, sorry if I spell wrong, Head of Chartering Singapore from Tsakos Energy Navigation. Thank you, everyone. Thank you for joining. Thank you, Marine Money. So good morning again. Our session is titled Best Investment in Shipping 2025 and Beyond. So I'd like to request to every participant, please keep your money ready. As soon as we finish our session after 30 minutes, you need to invest. You need to decide where to invest. Remember, don't wait and do it now. We learned from our previous panelists, right? Shipping has always been cyclical with low correlation to other asset class. That makes it both a powerful diversification tool and a sector where the winning mantra is very clear. Timing matters. I called it the 3E success mantra or formula. First one is entry, second is earnings, and third one is exit. And all these 3E are related to timing. If you can time the market, you will be the big winner. But we know that is not possible. 2025 has already brought unique opportunities and challenges. Macro factors are shifting rapidly. Geopolitical shift, supply chain realignment, economic uncertainty are reshaping global trade flows. USTR action, upcoming MEPC meeting, and ongoing energy transitions are all reshaping the role of shipping. We are dealing with many unknown unknowns. So we are fortunate to have an expert panel with us who will share their perspective, how to identify and capture best investment opportunity in shipping. Without delaying, let me ask the first question, this question to all our panel. Anybody can jump and start. The first question is high assets value. We have seen falling earnings except VLCC, rising volatility. Is there such a thing as best investment decision in shipping today? Anybody can start. Faidon, if you want to start.
Yeah, thank you, Amit, and thank you, Marine Money organizers, for the invitation. I think that let's all agree that when we're talking about best investment in shipping, till the time the book closes and we have a net result, we cannot really determine whether this is a best or bad investment, correct? I think, at least from our side, when we're looking into new investments, we're looking at what traditionally ship owners have been looking at, correct? Which includes the sector we want to invest, our risk appetite, the timing, as Amit said, the entry point, which is very important, the asset itself, technical details, one against the other. But there are more and more factors that come into play. I mean, there are factors that used to be important, but now there is a more and more growing importance of them, such as geopolitics, such as, for example, regulatory framework, that make this volatile environment even more, let's say, dynamic and fast-paced. I think in today's market, it's very tough to call it, specifically because, as Adam said, the asset values are extremely high and not supported by the earnings. We have seen the VLCCs, albeit being very, very high price assets, that still they are touching, 6 digits per day. At the same time, Suezmax are holding strong when it comes to second-hand values. But in my personal opinion, I think that, also our company being very strong in dry bulk, I think that Capesizes present opportunities simply because they have a fundamental factor there, which is the order book, which is still, I think, in the single digits compared to the Ultramax, Kamsarmax, or even if you go to the tanker side, everything is almost in the teens, correct? 12 to 18% of the existing fleet. So that was at least my view on that.
Thank you, thank you. Can I request Mr. Lim?
We are 3/4 ways into the year. With the benefit of hindsight, if any of us is long tanker or dry bulk equities from the start of the year, I think we've made some good money as of now. On the asset side, from a best investment point of view, I guess it's really sort of, when it comes to shipping, taking a longer-term view of the market. And as a shipping company, again, it's very much based on what your requirements are, the cargoes that you have to carry. I agree with the previous panel. If you sort of sit and wait and not do anything, you're probably going to miss the market as well. So taking a longer term view and sort of what your cargo requirements are, that will sort of guide you in terms of where you're going to put your money on.
Very good, thank you, thank you. And may I ask Mr. John?
Yeah. Very good morning to everyone. So very happy to be back to Maritime Money Singapore. As to the investment strategy things, I think definitely from our side, we are very much old school theory. So it depends on really the asset value, earnings. I think I really appreciate what Adam had the presentation. I think what we are seeing that now asset value is really, actually in the short term is moving up, both new building and second hand. So there's no sign that the asset value is slowing down. Probably 2028, you are absolutely right. So, but there may be some spikes even, 26, 27, we never know. But from the day one, I think what I would deeply believe is Mr. Warren Buffett said that any investment from day one should earn money, not lose money. We are not live in the future, we live from now. So that's the theory we still stick to any type of vessel. We don't have VLCC in our fleet, we don't have large tankers, but from dry container, gas carriers that we are doing, we just want to make sure from day one we are making money, even it's marginal, but we are not losing money. Because again, we never know the future will be. So that's the point. But it is very hard, let's say, to say that how to manage this. It's very hard because one way we want to say that we want to do the business counter-cyclical, right? So is this always our kind of success of the shipping industry, that to ride on the good timing before the market pick up, but sometimes, again, before the market pick up, so you may say a suffering on earnings. So how to balance this, I think it really depends on precise on timing. So take, for example, we look at the container ships the last 2-3 years. So I think Mr. Ponti did very well. He grabbed away 100 ships, second hand, whatever, new build slots. But look at the small feeder size container vessels. Their earnings are much more than Cape-sized bulkers. So, and the price is still very fair, reasonable. I think that's just as an example. Thank you.
Thank you, thank you. I think you are correct. Timing is everything, but we need to make money from now. May I move to Mr. George, if you can add?
Hello, everyone, and thanks, Maritime Money, again for the time. I mean, sitting from the side of an investment bank, we have the opportunity to look at different sectors and how our investors and capital providers think of the market. I think one thing that's been consistent, and that's probably a way to approach the question, is that the market has changed in the sense that there are different barriers to enter into different sectors, and we've seen a number of owners and shipping groups investing in sectors that they wouldn't invest before, which are not necessarily their core sectors. We've seen that trend in, for example, in the offshore space, which is more of a niche sector, what we would call this probably a couple of years back, but I think it's becoming much more conventional slowly. Looking even at the nice graphs from Adam, we can see that this is a sector that is making money from day one, and quite handsomely actually. And we've seen definitely a trend of larger shipping groups that they've been investing in other conventional sectors, looking at the space as well. But one needs to think on its investment decision not only from the sense of how much money the vessel will make on day one, what is the asset value, but also to consider its capital mix. An investment in shipping, it's rarely a one-year investment, right? If it's a one-year investment, it's either going to be a very good investment or a very bad investment. But on kind of a planning on a 5-year basis, one needs to think how they're going to construct their capital, both from the equity side. There's definitely much more opportunities that have opened up in towards co-investing, JVing in the space, and also from the debt side, ensuring that the type of capital has been raised also on the debt side can weather the volatility that you mentioned in your question. So definitely keeping an open mind to invest in other sectors that present opportunities and structuring the right capital mix should be important elements in the investment decision.
Yeah, I agree with you. Right capital mix is very important for any investment decision. If I can move to Mr. Chang, if you want to add something.
Hello, everybody, and thank you very much for the invitation. Okay, from our group, the public listed company is mainly focused on the tankers. So we firmly believe about the tanker market, especially the crude market. And that's why we justified by our actions by ordering a couple of VLCCs recently. And we also, as a company, we are also traditional conservative. We will not build on speculation. We will always build basis our clients need. So we'll go on hand by hand with our clients and say, okay, if you want a 5-year term project or 10-year term project, we are very happy and keen to build the vessel for you. And always we look on the investment, basically in the return of the next 5-10 years. So if it's a double-digit return or not. So basically this on the public side. On the private side, as you said, we are very confident about the Capesize sector because there is very low order book. There are a lot of dry docks going to happen the next year, and also the Simandou project is going to release a lot of hundreds of millions of tons of bauxite. So this will change the shift in dynamics in the Capesize sector, in our opinion.
Thank you, thank you. So I think looking at everyone's comment, the truth is there is no single best investment in shipping, and a lot depends on your risk, your time horizon, and the ability to adapt quickly. Now let us move to the next question. Where do you see the biggest blind spot for investor entering shipping today? And if I want to start with Mr. George.
Sure. I mean, it's an ever-changing environment. I mean, I think if you were asking this question 12 months ago, the answer would be very different, and probably it's going to look very different in again 12 months from today. I mean, geopolitical input has become a major factor into analyzing a shipping investment. I mean, take it from U.S. tariffs, selection of what type of vessel one needs to buy, whether it's Chinese built or not. How is that going to affect the investment decision? So I think by far the geopolitical element and the decoupling in terms of the way people look at the world from east side to the west side of things, if I may use that term, is by far the blind spot. I wouldn't call it necessarily blind, but something that can really affect an investment decision. So keeping a balanced approach between balanced approach in looking into this is probably the way to approach this to avoid any major negative surprises.
Good. Thank you. And if I move to Mr. Lim.
Yeah, I agree. It's not so much blind spots, right? It's just the uncertainties that all of us are facing, whether it's geopolitics or the energy transition. We're sort of in this interesting space, or this month, where next month you have your MEPC, as well as you have the USTR for the port fees. It's very difficult to price these changes into any financial model now. That's the reality of it for all investors. So again, it's back to how do you take a longer-term view with regards to the business, and what are the segments or the sectors that you can sort of manage some of these macro risk factors, especially going back to sort of your customer requirements or your cargo requirements. I think those are the best sort of mitigants for some of these risk factors as well.
Yeah. John?
I would say that there's always varieties about certainties, uncertainties. I think this is also changing all the time. If we look back the last 10 years' time, I think this voice of decarbonization is overwhelming in the industry. I will say that until recently, we heard some different voices daring shout out. That I think that's something that brings to a certain voice into uncertainties. Well, in our group position, we never done any kind of dual fuel, tri fuel efforts in the last 10 years. So we stick to the conventional one. I would say that is something that we hope that is not some factor that can be really threatening the market and industry. Instead, I think most of the people nowadays realize that how geopolitical things will really threat the whole world industry, business, market. I think that's still very difficult to define up to what kind of degree the geopolitical things will come up the next few months, years. I think still, personally, believe that's the biggest unknown factor.
Yeah, I agree. And Faidon, how do you see this blind spot in your S&P activities?
I was expecting the geopolitics to come and play in this question, but I would like to take a different swing at it. And because as a company we focus on purchasing and running efficiently, mainly vintage vessels, which means 15 to 20 effectively, all these assets are correlated, have a very strong correlation to the residual value. So for me, a blind spot, so to speak, is how this residual value will be treated down the line. The reason I'm saying this because I think the elephant in the room, everybody knows about the dark fleet, and I was looking at the statistics a couple of weeks back, and we're talking about 600 tankers in the OFAC list, which as we know is only a fraction of the total dark fleet. And all these vessels have some, 135 of which are VLCCs, by the way, and all these vessels have some common characteristics. All of these are overage, correct? We're over 20, poorly maintained, no spares available, they do not pass dry dock, they are not insured. Effectively, they are ticking time bombs. Even if the sanctions are lifted, primary, secondary, and so on and so forth, there are no A-class or B-class charterers that are going to go for these vessels. So leaving them, apart from probably a storage contract here and there, leaving them with only one viable option, this being recycling. Now, if you have 600 vessels in the OFAC list, well, not simultaneously opening the floodgates and heading towards the recycling, but even if they are phased out, we can expect that there's going to be a big supply coming. So this means that we should expect a softening. Now, if this is 15, 20, 25, nobody knows, nobody can predict right now. But we have a lot of bankers here in the audience. So just imagine what happens if you have that last Excel in the cash flow and you have to take discounted by 25%, how this will affect your investment decisions, correct? So I think this is something we should really look carefully at.
Yeah, so basically you are talking about sensitivity, understanding on the chartered hire earnings on your S&P decision, right?
Yeah, and effectively over the residual value that affects the whole cash flow end of the day, correct? So this is something just to keep an eye out.
Correct, correct. Now, Mr. Chang, in terms of your chartering activities, does the USTR is a blind spot for you when you're chartering the vessel for your operation or for your cargo?
Look, the USTR issue that happened like early in this year, it was a big problem basically because we didn't know the framework, what will happen next. Let's say we have a VLCC or we have a Capesize calling US or Canada or North America, what will happen? The thing is because this framework has not been established, I believe, totally yet, I don't think that it will be implemented in the end because there are a lot of interest all over the place. For example, how do you define a Chinese vessel? If it's a Chinese list, Chinese tow, Chinese operator, or if you have 100 vessels, for example, in your fleet, and you have built 2 vessels under Chinese leasing, the whole group is penalized. So this is going to create a lot of problems. Fortunately and unfortunately, we don't have so many Chinese vessels built in order for our fleet. And, but we think this will create a simple spike on the rates, a small spike in the beginning, but in the end, I think the logic will prevail and everything will go back in normality.
Yeah, I agree. I think on the USTR, we have more questions than answer as of today. Now let's move to ROI, return on investment, because our topic is best investment in shipping. Now to keep it simple, there are different segments. Adam shows us break-even and 1-year TC rate. Now when you look into the new build versus modern second-hand or older tonnage, in today's environment, what do you think is the good or better strategy in terms of the investment? And if I start with Faidon from your S&P side.
Yeah, I think that I tend to agree with John on that, that for us it's very important to have a good price point, correct? Because entry point decides, I mean, there is volatility in the market, that's why we are in shipping, to feed off that volatility, but having a good entry point is very vital, correct, for investment. In our company, we have made the decision to effectively be very active on purchasing vessels in the vintage, 15 to 20, and depending on the market, we might go even and opt for mid-age, 10 to 15-year-old vessels. Now, the reasons are obvious, because you're buying already depreciated vessel versus doing a capital-intensive purchase of, let's say, new building VLCR, 120 million, and so on and so forth. So you get a good investment point, and effectively, there is some traditional lack of competition there. Of course, Chinese are buying some of these vessels, that's for sure, but generally there's lack of competition due to the lack of traditional banking that really goes and supports the acquisition of 15-year-old plus vessels. So you get a good entry point, and then we have the mentality of trying to operate them as efficient as possible. When I'm talking about efficiency, I'm not only talking about working on the speed of consumption, but also try to elicit that extra value where you can find and where you can deploy this vessel in an effective way, efficient way, find these niche boutique trades where you can have some odd sizes, for example, and so on and so forth. So this is the mentality, and I think at the end of the day, because they are correlated to the residual value, to the recycling value, there is a floor in pricing, so effectively you have in a good market the chance of the appreciation, which far outweighs the depreciation of the asset. So that's at least our take on it.
So considering your MEPC which is coming, are you thinking that a new built conventional vessel, dual fuel is still an option now, or it is a wait and watch approach?
If I have to answer it, I mean, for us, it's a clear-cut stay on conventional fuel for the time being, simply because I think that, okay, nobody knows fuel of the future. I believe personally it's going to be nuclear, but I think we're like 30 years away from that. So till that time, I mean, people are supposed to pay 8 million, 10 million, 20 million premium on a dual fuel option where unless you do a line business, correct? For me, for us, we effectively want to do spot trading and do Trump shipping. Effectively, you know, we cannot secure the supply of this fuel. We cannot hedge against it. The delta on pricing has to effectively work its way in the investment cash flow. So effectively, from our side, it's like wait and watch, work on more efficient basis, invest on eco vessels, and so on and so forth.
Good. John, if you want to add something.
I think Faidon said exactly what I want to say, actually. But just to add a bit, I think to compare in an extreme case that if you look at a 36 years old feeder container ship still running by MSC, just extreme case, and then comparing with a scenario to order a brand new ship, same size for 28 delivery, I think there's no brainer, still do the old ones because the earning is instant and then risk is much more reduced. Comparing by ordering such a ship without any real employment support, I think the latter, I mean, ordering the new building becoming more risky and gambling style. So similar case on the Cape size. If you look at the new building price, it's almost 80 million to order Cape size or Newcastle Max. So for 28, 29 delivery now, I would say rather to do 10 years old for 40 million something than still. We can say until before 2028, 29, you have a very stable earning already to write down the risk and the investment capital. So that's I would say that sometime new building, you never know the ship you ordered is ordered for whom. Thank you.
So no new building, right? If I move to Mr.
Some great resales that some seller did, but different stories as well. Thank you.
Correct. Move to Mr. Lim. What is your view? New build, second-hand, modern tonnage?
Currently, my preference is more modern second-hand tonnage, just given how sticky new building prices have been. But that's it, because within the wider group, we have our own shipyard, so new buildings are always on the cards as well. So, yeah.
Okay, good. Mr. Chang?
If you see our fleet list, we have 18 new buildings at the moment. So back to the question about conventional fuel or dual fuel LNG, our new builds is basically conventional fuel, and we have some dual fuel LNG just because our client, our charterer said, we want to build with you, and it's a requirement to have a dual fuel capacity for this vessel. But it's a very difficult question, like modern, new, second-hand, because when it's up for a ship owner, when it's a good time to sell a vessel, then it's also a bad time to buy a vessel because it's going to be pricey. Because as a ship owner, when you sell, you consider the price quite high for you and it's good for you. But then you have to invest your money to buy something else. And then you need to see your strategy. I'm going for a second-hand vessel, which is immediately available, or I'm going to seek a longer contract, go for a new building, and we see how it goes.
Agree. So for the new build, if you have a supported by the long-term contract, might make sense.
Yeah,
Otherwise,
always.
modern tonnage. Now going back to George, when you are giving money, now what kind of a vessel you will give the more preference in terms of your risk management?
Yeah, I mean the capital markets and you call it bank financing or actual capital markets. I mean has become substantially more efficient over the course of the last years. I mean to your question before on and I'll take both in one shot. The investment decision is also a function of your investment horizon, right? So. You can make a new building work if you have a 10-year investment horizon. You cannot make it work if you have a short-term investment horizon. And you can make a second-hand, even very vintage vessel work with a short-term investment horizon. I think on providing capital, debt capital, there's definitely a series of options right now for all investment, all vessel ages. And the vast majority of the sectors, the capital markets in shipping have become. There is much more participants compared to looking at the market even 12 months ago, definitely 36 months ago, and so on and so forth across all vessel categories and asset classes. So obviously, the easy answer is yes. You will get more options for a modern second-hand or for a new building vessel, but that doesn't mean that this is the best investment decision. But you will get a number of options as well for even a 15-year-old vessel today, because I think the capital providers, they're not only looking anymore at the vessel ages, who's the operator, how the vessel is operated as well. And so the decision and the capital availability is a function of more than one things. So definitely I wouldn't call it there is ample liquidity in shipping, but we're probably the closest we've been in terms of liquidity, especially debt liquidity, to the let's say the 2007, 2009, 2008 period.
No, thank you. So time is ticking, so I have around 4 minutes. So before I ask my last question, any questions from the audience to our panelists? So I think we are doing great, huh? We have all the answers. So if no questions, let me get into the last one. So now I don't want to close this without discussing about this green technology or decarbonization net zero. Now, do you see the green technology, dual fuel vessel, retrofit, carbon capture as an investment opportunity in themselves or simply a cost of doing business? So anyone can answer this because we have around 3 minutes time. So maybe Mr. John, if you want to start.
I start already from previous dialogues. I think, no, we are not there. Thank you. A lot of things to be coped before this concept. It's a nice one, but I think, let's say, at least the war is over and done. Let's talk about that afterwards.
So this is like nice to have, not must to have.
It's going to happen, but not now, not in the short term, I think.
Faidon?
Yeah, I think when we're talking about all these technologies, dual fuel and so on and so forth, I mean, end of the day, there has to be some compensation for that, correct? And I know that there are, at least to my knowledge, only a handful of charters are willing to pay this premium for the dual fuel and so on and so forth. So I tend to agree with John on that 100%.
Mr. Hong?
I think that sort of lower-hanging fruits that we can look at is not just alternative fuel or nothing, right? Sort of in between sort of energy-saving technologies and all that. That's something that we can definitely look at as well. And to me, talking about decarbonization and how we can reduce emissions, it's always a good way to engage with your customer. Again, shipping in itself is part of a whole supply chain kind of ecosystem where we depend on our charterers and our customers as well. So working together hand in hand to look at some of these energy-saving technologies that will help to reduce emissions, I think that's the way to go.
Thank you. Mr. Chang?
I think I will agree with John. I think we're a bit far away, like maybe 5 or more years, in order all this regulatory framework to be implemented, because there is no any authority like to penalize or to measure all the kind of things or the carbon footprint. And also about the alternative fuel, it's only the major ports offer alternative fuels. If you are somewhere stuck and you need fuel, you're going to have like LSFO or HFO, something like this. If you need LNG or ammonia, this is not going to be happen. So I think we are very far apart from implementing these technologies.
It is a challenge is more of a supply chain and the infrastructure. And George, if you want to add something?
Yeah, I mean, I will sound probably repetitive, but yeah, I mean, there is, the economics are still not there, right? I mean, it feels that everyone is talking a big story and no one is happy to pay for that from the client side. Also from the capital provider side, I'm yet to see any material benefit given, but proper material benefit, and not just, you know, a nice announcement from capital providers towards supporting, you know, green projects in, you know, cheaper cost, materially cheaper cost of financing or more flexible capital. Still the Excel spreadsheet beats everything still. Yeah.
Thank you. So thank you to our panelists for sharing such a valuable perspective, and thank you Marine Money for the platform. May I request our audience to give a big round of applause for their participation.